Should investors prepare for a U.S. recession? You're going to want to listen to what one renowned PhD economist and investment strategist has to say. Because if he is right, investors will want to have their seatbelts fastened. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe, and we'll keep you in the know. Last year, Peter Berezin, resident economist and chief global strategist at BCA Research, predicted the current cycle of higher inflation and interest rates would end in the elusive soft landing. Not anymore. Berezin is now so convinced a downturn is coming that he recently authored a piece for the Financial Times titled, "Reasons Why Investors Need to Prepare for a U.S. Recession." Unsurprisingly, a weakening labor market is the foundation of Berezin's recession case, and he is especially concerned about the significant decline in job openings. In early 2022, there were 2 job openings for every unemployed worker. Anyone who lost their job back then could walk across the street and find new work. But now, as Berezin says, things are not so simple anymore. Those who lose their jobs are finding it increasingly difficult to secure new ones. Per the latest Job Openings and Labor Turnover Survey, there now are just 1.1 jobs for every unemployed worker, a roughly 50% decline in just the last 2.5 years. And that is only the beginning of Berezin's recession case. The personal savings rate stood at 2.9% in July, less than half of what it was in 2019. Consumer loan delinquency rates have risen to levels last seen in 2010, a year in which the unemployment rate was double what it is today. And home builder confidence dropped in August to the lowest level so far this year. But wait, there's more. Berezin cites persistent weakness in the commercial real estate market as another factor, noting that the office vacancy rates are at an all-time high. Sure enough, Moody's Analytics reported in July that the vacancy rate in the second quarter reached 20.1% nationally, the highest percentage on record since Moody's began tracking the data in 1979. Then, of course, there's the ongoing sluggishness in the manufacturing sector of the economy, which Berezin pointed out. The new orders component of the Institute for Supply Management Manufacturing Index fell in August to the lowest level since May 2023. And if you think everything is going to be okay because the Federal Reserve is starting to cut rates, Berezin says, think again. The Federal Reserve is unlikely to save the day, Berezin said, adding, the economy succumbed to recession just months after the central bank started lowering rates in January 2001 and September 2007. This is how Berezin frames the projected recession consequences for investors. This would bring the S&P 500 down to 3,800, representing a nearly 1/3 drop from current levels. Berezin's ominous projection serves as a reminder to investors the importance to both hedge and diversify. During conditions that can cause some mainstream assets to lose significant value, uncorrelated real assets, such as precious metals, have the potential to demonstrate a level of price resilience and durability that could prove critical. I'm glad you stuck around to listen, but listening is just part of the equation. Action is what will get you the results you want. Because if Berezin is right about recession, and if the consequences are as bad as he projects, you will need those seatbelts. That's why I suggest you take the time to learn more about what's really going on in the economy by attending our exclusive one-on-one web conference at AugustaPreciousMetals.com/webconference.